Hi, I'm Jennifer Chino, team lead at Staley Thompson Homes of Monument Sotheby's International Realty. Today we have a great topic about assumable loans, and I am joined by Chris Grizel of NFM Lending.
Thanks for having me, Jen.
So I'm super excited to go over this topic because as I'm seeing, as I'm sure you are seeing, there is a lot of talk about assumable loans, and we want to get to the bottom of it today. So give me your thoughts on assumable loans.
Yeah, sure thing. So we're obviously hearing more about this in today's market. And the reason is because rates have gone up since people purchased their homes. And if you have this souvenir rate from the COVID days in the 2s or 3s, it's attractive for new buyers to think that they could take over your loan to purchase your home. And what we're seeing is listing agents actually putting that in the comments of their listings, which is what's really drumming up all of these conversations. So I have tracked a few of them through various realtors. They have taken from a range of 4 to 6 to even 9 months to go to closing. So from my experience, you need a very patient seller, a very patient buyer. Like, you don't know when you're going to move in. So the seller is in no rush to go anywhere. The buyer has temporary living situation, whether it's with parents or in-laws maybe. And then the other obstacle that I'm seeing is, where does the cash due at closing come from? So the people that bought these homes previously, now the market's appreciated, so their home is worth more. So let's just say you have a $500,000 VA loan and you're selling your home for $600,000. So there's $100,000 to make up. Well, that loan doesn't increase for the new buyer to buy the home. So that's got to come from somewhere, which means cash or a gift. I have not found any lenders that will put a second mortgage on an assumable transaction. There might be one out there, but I haven't found one. So that's been the big obstacle that I've seen. People getting VA loans often really like them because there's a no down payment requirement, right? So zero money down, and that $100,000, for example, is a big deterrent.
Definitely. So let's talk about eligibility. So if you are assuming a loan, do you need to be VA eligible, and how does that work?
Really good question, and most people don't realize this. Someone with a VA loan that's selling their home, the VA seller we'll call it, does not have to sell their home to a VA buyer. It could just be someone that's not VA eligible. But there's some risks involved with that. So number one is the seller cannot go obtain a new VA mortgage because their eligibility will not be restored, which means they'll have to go get a conventional loan or an FHA loan in the future until that loan is sold or refinanced. And then the other big risk is that if that non-VA buyer were to default on that mortgage, the problem is now that seller would never be able to restore its eligibility. In general, as a seller, I would think that it would be best to try and find a VA buyer, which is kind of narrows the pool of buyers for you. But a VA buyer will then allow the VA seller to go buy another home using a VA mortgage.
So essentially, seeing that the VA loan or any loan is assumable is a great, almost clickbait, but you have to make sure that you get all the fine print ahead of time. Or what else do you recommend?
I recommend, it's worth a shot pursuing, but I would definitely have a plan B and a pre-approval from a lender that can move you into a home if a home comes available that you'd like that's not an assumable mortgage.
So the bottom line is, get the information ahead of time, see if it's a right fit for you. And if you have any questions, feel free to reach out or leave a comment. Thank you so much.